Yeah, big relief rally, Paul. I mean, this was always kind of muddying the narrative. I mean, we've spoken about this multiple times. Netflix is such a clean, organic growth story, and them just pursuing Warner Brothers Discovery, I mean, just kind of added so much of uncertainty. You have the regulatory risks, of course, integration, execution risks. Plus, we were talking about something like, their debt levels going up to beyond $100 billion. And yes, they do have the financial firepower, but at the end of the day, they have always been builders versus buyers. And once again, they showed, that they deserve, they've always gained this reputation of being very, very disciplined spenders when it comes to M&A. And I think they once again exercised that discipline, and investors are cheering.
So it seems that this is a smart move, according to analysts, including you. Does this signal that the company is confident in its organic growth versus M&A, especially in a very crowded streaming market?
Yeah, Isabel, I mean, that had, been the question. I think that's what spooked investors so much when they actually went ahead with this $83 billion deal for Warner, about whether they were actually seeing a slowdown internally, and them not just abandoning the deal, but also going ahead and resuming buybacks. Once again, just kind of signals confidence in their underlying growth model. So I think, we know very well that their operating metrics are really strong. I mean, this is a company that has guided to double-digit revenue growth. We're going to see about 12 to 14% revenue gains this year. We're looking at operating margin expansion of almost 1,000 basis points. It's gone up 10% over the past 2 years. So, and of course, we also have fabulous, free cash flow generation. So all of their, financial levers and all of their growth drivers very much in place. And, not having this distraction anymore just helps them kind of really double down on their organic growth story.
On the other side of the equation, Geetha, be careful what you wish for. So Paramount, they've got this great asset in Warner Brothers Discovery. What's the street think about this management team at Paramount? It's pretty much unknown, untested, this Mr. Ellison from the media community. Is there any report card to date? Does the market think that this is a management team that can make this acquisition work?
They probably can, Paul. I mean, they do have, they do have some financial firepower here. Although I would point out that leverage at this company is going to be extraordinarily high. We're looking at pro forma leverage of around almost 7 times. Those are, dangerously high levels. Yeah, and it's something that they're going to have to contend with. But at the same time, they've spoken to synergies. We're looking at about $6 billion in synergies that they've committed to. And remember, this is a team with a fairly tech-heavy bent. So that might be something that kind of really serves them well as they poise themselves for this new streaming future. You do have now, they kind of are turbocharging their content offering, they're turbocharging their streaming business, and they have all of the pieces in place to make this a really good business. We'll have to wait and see how they execute. But you're right. I mean, the management team is a little bit of an unknown, although we do have Jeff Shell, who has experience from NBC. But again, it's going to be a little bit of a wait and watch.
And Netflix also said they plan to invest $20 billion this year in films and shows. Is that enough to keep them ahead, again, in this really competitive streaming wars?
Yeah, the 20 billion that they committed was actually a pretty significant step up, Isabel, from prior years. I mean, we've seen them increasing content costs by roughly about 6 to 7%. This year was going to be a much more significant jump to about 10%. And this is just basically Netflix saying that they are willing to diversify into different forms of content. I mean, the big investments that they're making are in live, in sports, in international content, just to kind of keep up that engagement metric and make sure that, they keep building on that competitive moat that they already have. And now, the icing on the cake for them with this Warner deal is that they're getting $2.8 billion in termination fees. So, hey, much more K-dramas, I guess.